Forthwith. The Honourable Jerry Brownlee.
I move that the Insurance Prudential Supervision Amendment Bill and the Reserve Bank of New Zealand Amendment Bill be now read a third time. Mr Speaker, this is a bill that essentially looks at the prudential arrangements for insurers in New Zealand. The Act of 2010 established a licence and prudential supervision regime for insurers carrying on insurance business in New Zealand. It replaced existing outdated and disjointed insurance legislation and aligned New Zealand with international regulatory benchmarks and expectation. This Act, sir, represents a significant step forward in terms of delivering comprehensive prudential regulation of insurers carrying on that business in New Zealand. While the 2010 Act has proven to be generally effective and robust, it's not expected that some of the provisions that have been identified as appropriate for reform, it's not unexpected, I should say, sir, that some of those areas that were identified as appropriate for reform are considered in this bill. The Insurance Prudential Supervision Amendment Bill contains a small number of amendments to the 2010 Act and one consequential amendment to the Reserve Bank of New Zealand Act 1989. The amendments were identified by the Reserve Bank when reviewing the operation of the Act during the transition period toward full licensing that expires at the end of September in 2013. A short time away, sir, and one of the reasons why we need to get the bill through for royal assent as quickly as possible. The bill aims to reduce or eliminate unnecessary compliance costs and address technical issues identified during the provisional licensing to ensure a smooth transition to full licensing of insurers. This review has been a useful post-implementation exercise, and the Reserve Bank aims to complete a wider policy review in 5 years. The bill allows for a provisional licence to remain in force at the discretion of the Reserve Bank if particular circumstances apply to an insurer. The provisional licence may remain in force until the Reserve Bank is satisfied that it should be cancelled. The bill also allows for overseas insurers to be permitted on application to and approval by the Reserve Bank to provide half-yearly financial reporting based on the home country regulatory reporting requirements. An important matter, sir, as New Zealand, I'm sure, would benefit from more insurers in our local market to augment the large players who currently have such big chunks of our market. Two other proposals are expected to reduce or eliminate unnecessary compliance cost. The first of these allows the Reserve Bank to exempt an insurer that is running off its liabilities from the requirement to have a current financial strength rating. Mr Speaker, I think you would find that Southern Response in Canterbury fits into that category. The second clarifies that in respect to contracts of insurance that renew more frequently than annually disclosed in writing of the insurer's financial strength rating to the policyholder may be made on at least one annual basis rather than at every renewal. The amendment bill also takes the opportunity to address the technical issue, for example, providing a limitation period of 5 years within which the Reserve Bank may file a charging document against an insurer that has committed an offence to ensure consistency across both acts. The amendment bill also empowers the Reserve Bank to publish and maintain on its website an official register of licensed insurers and additional content to be determined by regulators. This will result in consequential amendments to the Reserve Bank Act 1989. I commend the bill to you, sir, for its third reading.
The question is that the motion be agreed to. I call the Honourable David Parker.
Thank you, Mr Speaker. The Labor Party supports this bill.